Welcome everyone. This is Mike Hamilton, and I've got a guest with me, Graham Hall. Graham, start again. Hello everybody, this is Mike Hamilton for Trade the Easy Way, and I have a guest with me for the weekend preparation. So I'm very pleased to welcome Graham Hall. Say hello, Graham.
Hiya. Hello, hello.
Graham has been trading for quite some years, and he not only does he do stocks, he also does a lot of options. So he's very focused on the big picture and stocks and stock sectors. So I asked Graham just to join me today, just so we can have a quick chat about how the markets are looking as we get towards the election, the US election. I think it's about 37 days roughly off the US election. So Graham, what's your view about what the markets are showing us at the moment? I've got the S&P weekly chart up here. What are you seeing at the moment?
Um, I think generally caution is the word at the moment. I suppose also in the wings as well as the election is a potential rise from the Fed, which a lot of pundits are saying is going to be this December. But who knows? Because the Fed keeps saying that maintains that it's data driven, so it could be data driven. But I think interestingly there was a political professor interviewed on one of the channels a while ago, and he has correctly predicted the results of many of the recent
Okay.
elections, and he's predicting a Trump win. So I think if Trump were to win, I think we'd have a period of volatility, and I think Trump, if he wins, has to show the market that his economic plans are going to work. And I think if the market then takes on board that his plans are indeed working, and the timescale to that, who knows? I don't know. But things like the materials sector, building, construction, the oil industry is going to be a big beneficiary. The gas pipelines, the coal industry is going to benefit. Car makers in America are going to benefit because he wants to stop these companies, or to induce these companies to do more at home.
Yeah, I mean
But the proof of the pudding is going to be in the eating. So I think
yeah,
initially there will be volatility. I
I
mean,
mean
equally, if Clinton gets in, the pharma industry I think is going to take a hit, because she's determined to give them their just desserts for price gouging over the years as she
mm,
sees it. So I think it'd be quite interesting to watch the pharma and the biotech sector and see how they do in the run-up, because that will also be some indication of investors in those industries whether they think it's going to be a Trump or a Clinton victory.
I think it's a very interesting sector this time of year anyway. Cyclically, that tends to do well this time of year anyway because this is their conference season. So
Yeah, I mean the ETFs to watch for that as far as US stocks go are XLV and XBI. They're the ones I've got my eye on.
okay. Okay, well, let's just switch over to the technicals for a moment and just look at this weekly chart on the S&Ps. Now you can see we are channeling very, very nicely. So we're very close to the top of that channel. Very flat week last week. The dips are still getting bought. We had that
Yes.
sharp, short dip in the early September, but all we did was go right back to the bottom of this smaller sectional channel up here. Let me just draw.
I think it's worth just talking quickly
Yeah,
about
go on.
why the dips getting bought. I think one of the reasons is there's just an awful lot of money sloshing around from central banks. I mean, you've got Draghi buying corporate bonds, you've got the Bank of England about to buy corporate bonds, as well as
Mm,
regular bonds. Bank of Japan's has been buying corporate bonds and ETFs in the main market.
mm,
And I think the Bank of Japan is the biggest holder of its own debt. So these dips get bought because there's just, I think, the liquidity is enormous,
Yeah, the liquidity
which
enormous.
kind of makes it a bit of a house of cards in a way,
Yeah, yeah, it does. Yeah,
possibly.
but certainly no sell signals, and far from it. I mean,
No.
this dipped nicely a couple of weeks back, gave us a nice little buy signal on this 20-day moving average. You can see how on the technical front, just for a moment, this 20 was really trending really well through 2013, 2014, 2015, and then we had these big moves last year and a weak start to the year, but then we got straight
Well,
back on track.
yeah, I mean those big dips that you've put on the screen here. I mean, I think it's worth at this point talking about oil because a lot of that was down to oil and sovereign wealth fund selling.
Yeah,
And it's only because we've got oil back over 45, $40, $45 that I think pressure on the Saudi Arabias, the Qataris, some of those other countries is relieved for the moment, shall we say?
mm. Look at
But
all.
I think if oil dips lower and stays low, we could see some more sovereign wealth funds selling, which would I
Yeah,
mean basically they sell blue chip stocks to raise money to keep the home fires burning.
yeah. But we'll look at oil in a minute because it's an interesting point. But I think oil is looking good. We certainly saw that the pullback midway part through last week was very, very technical. Oil is a very,
Yeah, I
very
mean I'm long oil.
technical instrument.
I mean
Yeah.
I'm long oil. I've got a position in XLE
Mm.
and some USL, which is an ETF for WTI oil, and some options on USO.
I mean,
Oh, and they're in the gas and pipeline
yeah.
ETF.
Well, if we just stick to the S&P's technicals at the moment, I mean, where we are at the moment is we've had a decent push to the upside. We've had one wave to the downside, another wave to the upside, and all we've done here is, 2 weeks back we came down to the 20 EMA and we closed just on this area here 2 weeks
Hmm.
back. So the fact that we are holding up nicely is great. I think that particular candle suggests that we could be in for another dip. So what I would see from my experience on the technical side, I would suggest we might come back down to the 20 again, but this time I think in this wave count, this is traditionally a wave, part of the wave that stutters and takes a little bit of time to work out anyway. So I would suggest that we will come back to that major support, and then as we perhaps head towards the election and into
Yeah, when is the US election?
it's 37 days. If you
Just Googling it on another screen.
Yeah, so that would put it at um,
November 8th.
November 8th. Yeah,
Choose. I say put a vertical line on your chart.
yeah,
November 8th.
yeah. So yeah, I think some hesitation at the moment, but on the whole, that's a very, very technical chart, and any pullbacks to, this time last weekend, I was talking about this trend line here on these. Actually, the Dow was cleaner. Whoops, didn't mean to do that. The Dow did a much tighter weekly test of a trend line. So I think this bar here is suggesting we could come and test this trend line now, and at which point I think that will give us the next wave to the upside if that holds. If we can hold this 21.38 after a dip onto that trend line, then I think we could see some swift action. But
Well, I suppose we've got it's also kind of like Santa Claus rally time as well, isn't it? Coming up
it is, yeah.
in that time of year, shall we say?
If we are going to have a Santa Claus rally, then yeah, the dips in September tend to get bought, and then we start to hesitate here into October, and then get going as we come out of October into November, December. Yeah.
I think the other there's a couple of other important charts to look at. One is you may not want to do it now, but IWM, which is the Russell 2000,
No,
and
yeah, that's small
which is
caps. I think
a lot of the small caps. The
yeah,
other one is the other one to look at is QQQ, because that's the tech sector, and there's a high correlation. You know, a lot of the stocks that are in the QQQ ETF and the Nasdaq index are also in the S&P. So
I
there's a fair
yeah.
bit of correlation between the S&P and the QQQ. Not so much the Russell 2000, because it's got 2,000 stocks in it.
I
But
think the Russell 2000 is a good one to look at because by looking at mid caps, yeah, mid caps are more reactive to what's going on, a little bit quicker to react to news and general trends. So
yeah,
yeah, this is looking okay. Again, a nice pullback to a very, very strong trend line here, 3 weeks back. Again, I would see a pullback. This to me sort of builds very nicely on what I've just talked about. You know, I would see a pullback into you know, the lows of that drop before we get the next leg up. So a little bit more consolidation, a little bit perhaps some more weakness in the early part of the week or in the coming couple of weeks, and then you know, continuation of that move into the channel high.
yeah. I'm
Let,
just
us look at
just looking
oil.
at some.
We've talked about oil and the importance of the impact of oil on the markets. So let's just cut across to oil for the moment, particularly
Okay.
this is the weekly on the oil. Let me just make sure my fibs are up to date. Yeah, I'm quite happy with that area. We didn't quite get a three-wave reversal pattern here, only because oil didn't quite dip low enough. So we had an inverted hammer 2 weeks back, and then a very nice close higher last week. So very technical. Let me just take this resistance line off. So if we rely totally on fibs, we are looking at a pullback around about the 46.40 area and a push in the coming weeks heading up to 58.60 area to retest this sell zone.
Yeah, I mean, I'm hanging on for $60
Yeah,
ish.
I think the mean. Let me just pull back even more, put a bit more detail on this. I think the mean for me is around about 70, 75. So into next year, if we're talking about the big picture and the prospect for oil, yeah, I would look that 73.40, 75 area. I think is going to get hit as we head into next year. But that's certainly that's a nice reversal pattern down there. And yeah, let's just have a look at the bigger trend line here. If we can crash into that and start closing above this area here, then again, I'm looking much longer term, but I think 73, 75 and 80 bucks is potentially on the cards. But throughout the rest of this year, yeah, I would see I'm very much in line with your thinking about the 60 bucks mark.
Yeah, I think so. I mean, I know you don't necessarily want to talk about reasons, but I think a lot of these OPEC members are suffering hugely from this low price, and Saudi has well, proof is in the of the pudding is going to be in the eating as far as production cuts go. But you know, OPEC a few days ago has agreed to limit their production to, what was it, 33 million barrels a day, I think.
Yeah.
They're going to fight amongst themselves as to who gets a share of that. But you know, definitely Saudi can't continue. Saudi is burning the family silver on oil at the prices even here.
Yeah.
They've spent something like 25% of all of their reserves in the last 2 years.
I think the figure that's
So
normally banded around, particularly for the shalers as well, but even for Middle East, the figure that's normally banned, it used to be banned around, was around the 70 bucks mark for
yeah,
sustainability in their economy and their production costs and so on. So
mm,
we've been under that. You know, 2016 has hit them really hard. All those months down there at 28 and 30, 35. Yeah, as you say, that's cost them a lot of money. But that is looking good. That's a strong wave.
And I think also oil is another one of those. If it dips, it gets bought.
Yeah.
So
If we
I mean
look
that's a weekly chart. If you look at the daily, you'll see it gets bought on the dips.
Yeah, if we look at this on the wave count,
The other thing that's worth mentioning is the ETF USO. I think I read it controls something like 40% of all the contracts in WTI.
right.
So when that thing gets to round numbers, like it's hovering around, it was around about $10. Although people should be aware of the effect of contract roll in that ETF. It loses value as time goes by, but it is the trading vehicle on the US stock exchange,
Right.
for oil futures aside.
Yeah, but we're right, not quite touching the high of the apex, but so I'll be looking out for 46.40, ideally 46, but if we can get any dip into that, then that'd be great. Let's have a look at the euro, because I know you're very interested in euro US dollar at the moment anyway.
Yeah.
So you took a position long on euro US dollar last week. So what was your thinking when you did that?
Well, I've taken a position in FXE, the ETF, which uses dollars to buy euros. So I just sold some out of the money puts, to be honest, just on the expectation that my strike price of 107 is not going to be breached.
Right.
So it's long, but so long as the price doesn't dip too much, I'll be all right.
Okay. Well, okay. Let's get technical now.
Yeah.
And we've not had a
I kind of
three.
saw it as in a bit of a channel here, actually.
Yeah, it's in a big box for me.
Yeah.
It's
I
in.
think on the weekly, if you look at that last little tiny channel on the weekly, if you look at that on the daily, those last sort of
Yeah.
8 to 10 bars on the daily, it's a nice little channel there.
I mean, the box. Let's talk about some technicals for the moment. I mean, the box play normally, if a market is going to pop out of a box, then I would expect to see three touches of each side of the box, and we haven't had, so we could be in for another touch of the box here at 115. I'm not far off it anyway. Ordinarily, I would expect the same 2-3 at least touches at the bottom of the box, which we haven't had. All I would say is we've held the middle of the box very, very well. I mean, a decent push out of the middle. And now this 20 EMA is suggesting that we've had two closes higher on the 20 EMA on the weekly.
What's the
So
MACD doing?
that's okay. Let me just pull that up in more detail. Let's pull the MACD right up. We are just pushing through. We're pushing through the midline. We've crossed on the signals here. We had significant divergence down here. So we were, let's have a look.
I think one of the things to watch out for with the euro is Deutsche Bank. I had a position in Deutsche Bank earlier in the week, and I bottled it when it started. Well, I bottled out of the position because I made the mistake of listening to somebody on the news, and of course the next day it went up. They were talking about it having to raise capital, which it may yet do. But I think if Deutsche Bank is seen to sort itself out, I think that will generally be good for the euro and European banking. But I can't see it happening, anytime soon. But it's definitely one worth watching.
I haven't looked into this particular aspect of Deutsche in fantastic detail. Last I heard on Friday, they were trying to renegotiate the penalty significantly, so that might bring a lot of pleasure to the euro.
Yeah, I was just sold some options in it on the US market.
Yeah.
So,
And look at the big picture here. You can see, this high in August last year was a technical high into a major resistance area. But yeah, I mean, I think I would guess that we're heading for 115. It's a question of what we do at 115. And it's interesting. I did an interview when I was on a Forex conference platform last December, and the interviewer said to me, how soon before the euro gets to parity? And I said, hold your horses. I think the euro is going to surprise you. I think if the euro is going to get to parity, I think we're going to have to at least see some higher levels before we see a decent sell signal, and that has played out okay. So when I was doing
yeah, I
the
suppose. Yeah, you've got some things holding the euro back, haven't you? Draghi's buying his QE program is
yeah
carrying on strong, and also there are a number of key elections are coming up around Europe, aren't there?
yeah
In the not too distant future. I mean, Hungary's got one this
Hungary's
weekend?
got a referendum on whether to allow more refugees into their country.
Yeah.
So I was doing this conference here at this particular point, and I just warned people just to hold your horses, and just to see what um, the euro is going to give us. And sure enough, this year we've been treading water, pretty much a box play, but the dips have got bought here, so I can see why you are long the euro US dollar.
Mm. But it's interesting in terms of headwinds. Like, probably the dollar's got about as many headwinds as the euro's got at the moment.
Yeah,
Elections, interest rates,
yeah.
QE. Well, the US isn't talking about QE, but a lot of that QE money is slopping around and corporate profits,
Well,
coming
let's
back.
just okay. Well, look, what I want to do is just switch to gold, and then I think we'll leave it there because I think what I'm
Okay.
going to do is use this conversation as a prelude to a much bigger structured event on the bigger picture as we
Hmm.
get closer to the election. So I'll send out announcements on when we're going to do that. But in the meantime, let's just finish up and looking at gold. And here you can see I've got gold in this channel, and we are just at the coming off at the moment. We're coming off the top of the channel. This is a weekly in gold. The 20 EMA is moving very, very nicely underneath us, so we're still holding it. That was not a sell signal on the weekly because we closed inside of the previous week's bar, but we're certainly struggling here. So any close under 13 could see us push lower, but the gold bulls are definitely holding this up. We have got let me see, at the highs we did have divergence. We have bearish divergence up here, and that bearish divergence is showing itself in this high here. Was a lower high here on the signal, and we have actually crossed on the, so I will make this clearer next time we do this. This MACD is not particularly brilliantly clear, but you can see what I'm getting at.
Hmm.
We pushed higher up here, and the MACD was suggesting that we weren't going to do much, and sure enough we are just slopping around between 13 and about 13.75, give or take a few bucks. So not much to do with gold. I'm not in gold at the moment. What I would do with gold,
To be honest with you,
I would suggest
yeah.
we just look at pullbacks to support at the moment. If we get any move down to that 1250 area there, then I'd suggest we may be able to come back. That would give us the push up in this particular moving average here, which is a 150 simple. And so I think the gold is going to see some lower levels as we drift lower. Then, as you say, we get some volatility, which I would endorse. I would suggest we could be into some volatility as well. yeah, I would be a
Yeah.
buyer on this support level to see if we can come back and retest and punch through that
Yeah.
the top of that channel.
Yeah, it kind of correlates quite well. Is the gold miners, the ETF GDX. That's worth keeping an eye on as well, because that's just coming down to the 200 MA on the weekly.
Okay, let's just pull that up.
That correlates quite well.
Yeah,
So in GTX you've got kind of a mix of gold and business, shall we say? You know what the market's doing. So
yeah.
in terms of
That's had a decent run, so we're definitely seeing a lot of profit taking up there. You can see how key that level
yeah.
was anyway. That was actually a gap fill up there. According to this chart, there was a gap
Oh, way back
on
when.
April 2013. That just shows you how sometimes how long some of these gaps can take to fill.
Hmm.
So I would start to look at this one. So miners have had a really great run. I would start to. I think we could see a move back to 22.10 here on this one. That's asking a lot. That's a significant drop.
I'm actually surprised gold hasn't gone up further, actually, because apparently a lot of the Arab China's been buying huge amounts of gold.
Right.
I would
Okay.
have, I certainly,
Well, certainly, we'll keep very, very close to that, and I'll do more detail on what the gold's doing, particularly these miners. Um, yeah, some of these miners have just had a great run, so I think they're overdue a pullback. But if the gold is going to be continue its current bull move, um, yeah,
what's that EMA? What's that moving average you got on there, Mike?
they're both
The
simple.
longer term one.
It's a 20 and a 150, simple.
Oh, it's the 150. Okay.
Yeah, I just recently started using the 150 because it's I think it's just proved its worth on quite a few charts. So you can see
Hmm.
back here on January 2010, we picked up a nice low here. We picked up a pullback here, December 2011. And we only just breach it in September 2012 before we see this dramatic drop. So on many charts, particularly stocks, this particular moving average has really proved its mettle. So very keen on using this at the moment. I'll talk to you in more detail on that. But let's leave it there for now. Thanks very much for joining me, Graham. Very interesting to hear your
You're welcome.
view, particularly with your mix of fundamentals and technicals and your experience in options. So I'm going to come back to you when I organise this bigger picture full Monty, and we'll publicise that and invite you guys along. So thanks very much, Graham,
You're
and
welcome.
thanks for listening, everybody.
Okay.